Joining us from CommSec now is Piotrowski. Good morning to you, Tom. Just checking the oil price. Look, it's up over 5% in 24 hours. So this is the focus again this morning.
Kenny, it's an important point to understand the dynamics around oil prices, because you could argue that they are the linchpin for the markets at present. So from the lows of the last couple of days, you've seen oil prices up by around 10%. You rightly point out they're up around 5% this day. But within that context, it's important to understand that in the conflagration that we're seeing grimly depicted on our television screens and otherwise, the energy infrastructure in this area is largely intact. The important movement of energy through the Straits of Hormuz, you see around roughly a quarter of the world's seaborne energy move through that choke point. That's moving pretty freely. So unless that situation changes dramatically and oil prices hurtle off into an unwelcome direction, there is a sense that there's a containment where the negativity is concerned in equity markets, particularly globally. So they were lower, definitely, where US and European markets are concerned, but the losses seem to be contained for the moment. So in the case of the US, you had the Dow Jones down by a little less than 0.75%, the S&P 500 down by around 0.8%, and the Nasdaq down by about 0.9%. Most sectors lower. The outperforming group were energy stocks, unsurprisingly, under those circumstances. European markets lower across the board. The German DAX was down by more than 1%. The French market down 0.75%. The FTSE was down by 0.5%. Again, it was the energy sector that outperformed. There was a move lower for long-term interest rates last night. That's significant because from time to time that movement of money into safe havens hasn't been consistent, but it was last night, particularly where US government bonds are concerned. So in Europe, that helped real estate stocks. As far as the local picture is concerned today, the futures are pointing to a decline of about 0.25% for the ASX 200, Kenny. So yesterday we only saw a modest decline. Today another one is predicted at the open. So our market is holding up reasonably well under the circumstances, again reflecting that containment of the negative sentiment that has dominated so far. But one thing that has happened last night is that you've seen the US dollar push ahead quite substantially. So the Aussie dollar has lost about more than half a US cent against the greenback, and that push higher for the US dollar has made life difficult for some, but not all commodities. So gold, under the circumstances, you'd think it would be doing a little bit better, but is largely flat. You're seeing iron ore prices at their lowest levels since September of last year. So that might be a challenge for the local market today, the performance of those commodity-facing sectors.
Okay. Tom, thanks so much for that. Talk to you soon.